For the past few years, a very specific story has been circulating online. The dollar is dying. Saudi Arabia is abandoning the petrodollar system. BRICS is building a new global currency. Oil will soon be priced in Chinese yuan. You've probably seen the headlines. The end of dollar dominance. BRICS versus the West. The collapse of the petrodollar. For a moment, it looked convincing. Saudi Arabia announced it was joining BRICS. Russia began trading energy outside the dollar system. China started settling some oil purchases in yuan. If you zoomed out just a little, it seemed like something historic was happening. The financial order that had dominated the world since the 1970s might finally be breaking. But then something happened that almost nobody connected to this story. October 7, 2023. War erupted in the Middle East. Shipping routes became unstable. Energy markets turned volatile. Global risk spiked almost overnight. And quietly, without any single headline explaining it, the most hyped financial revolution of the decade stalled. Not slowed, stalled. Because when you look past the headlines and examine the actual infrastructure behind the global dollar system, you discover something important. The system that's supposed to replace it doesn't really exist yet. And the Iran conflict just made building that replacement dramatically harder. So today we're going to walk through what's actually happening. Not the hype, not the viral thumbnails, but the real mechanics of global finance. Because if you've been making financial decisions based on the idea that the dollar system is about to collapse, you need to understand why that timeline might be wildly wrong. Almost every discussion about the end of the petrodollar starts with the same statistic. 2 decades ago, roughly 90% of global oil transactions were priced in US dollars. Today, that number is closer to 80%. 10 percentage points of decline. On the surface, that sounds dramatic. But the statistic is almost always presented without context. Because the dollar's role in energy markets isn't just about pricing oil contracts. It sits on top of a much larger financial infrastructure. Global foreign exchange markets process around $7.5 trillion in transactions every single day. Within that system are correspondent banking networks, dollar-denominated derivatives markets, trade finance institutions, central bank swap lines, and global settlement systems that have taken more than 50 years to build. When a Brazilian company buys oil from Saudi Arabia, that transaction might involve multiple financial institutions. A bank in Sao Paulo, a clearing bank in New York, a derivatives hedge executed in Chicago, a shipping insurer based in London. All of it connected through dollar-denominated financial plumbing. Replacing the petrodollar system isn't as simple as switching currencies. It would require rebuilding much of that infrastructure from scratch. And historically, that kind of transition takes decades. The British pound didn't lose its global reserve status overnight. It faded gradually over roughly 40 years as the US economy became dominant. Monetary systems rarely collapse suddenly. They evolve slowly, which raises a question. If currency transitions historically take decades, why are so many people convinced the dollar is about to collapse in the next few years? To answer that, we need to look at the coalition most often presented as the replacement. BRICS. BRICS is often described as a geopolitical alliance that could challenge Western economic dominance. The original members were Brazil, Russia, India, China, and South Africa. In 2024, the group announced a major expansion. 6 additional countries were invited to join: Saudi Arabia, the United Arab Emirates, Iran, Egypt, Ethiopia, Argentina. At first glance, the expansion looked significant. Several large energy producers, major emerging economies, a coalition representing a huge share of the world's population. But almost immediately, complications appeared. Argentina declined membership after electing a new president who favors closer economic ties with the United States. Saudi Arabia accepted the invitation, but has not fully joined the organization. Instead, the kingdom has taken what diplomats describe as an observer role. In other words, Saudi Arabia is watching the process closely, but it hasn't committed. And the reason for that hesitation is extremely important. Geography. More specifically, the country sitting directly between Saudi Arabia and much of the BRICS financial vision. Iran. Saudi Arabia and Iran have been geopolitical rivals for decades. Their competition isn't just political. It's ideological, strategic, and at times military. In 2023, China brokered a diplomatic normalization agreement between the two countries. The deal restored formal relations, and many analysts described it as a major diplomatic breakthrough. But restoring diplomatic relations doesn't automatically create strategic trust, and a financial alliance requires an enormous amount of trust. Countries must move reserves, investments, and financial infrastructure through shared systems. That level of integration creates deep interdependence. Iran complicates that process for one major reason: sanctions. The United States maintains extensive financial sanctions against Iran. Any institution that facilitates large-scale transactions with sanctioned Iranian entities risks being cut off from the global dollar system. This is known as secondary sanctions. After the Hamas attack on Israel in October 2023, tensions across the Middle East escalated rapidly. Soon after, Houthi militants in Yemen began targeting commercial shipping in the Red Sea. The attacks disrupted one of the most important trade corridors in the world. Insurance premiums for cargo vessels surged. Shipping companies began rerouting around Africa. Global shipping costs jumped sharply. Energy markets reacted immediately. The United States responded by forming a naval coalition to protect shipping lanes. The initiative was called Operation Prosperity Guardian. Several Western countries joined the mission: the United Kingdom, France, Italy, Canada, the Netherlands. But some of the countries most affected by the shipping disruptions chose not to join the coalition. Saudi Arabia stayed out. The United Arab Emirates stayed out. Egypt stayed out. At first glance, that decision looked like a shift away from Washington. But if you examine what Saudi Arabia actually did financially during this period, the picture looks very different. Saudi oil exports continued to be priced in US dollars. The kingdom's massive NEOM megaproject continued to rely on Western financing, and Saudi sovereign wealth funds maintained heavy exposure to dollar-denominated assets. At this point, there's one question that rarely gets asked in discussions about the petrodollar. If the dollar system is being replaced, what replaces the clearing mechanism? In global finance, clearing is the invisible infrastructure that settles transactions between banks. For dollar transactions, that infrastructure already exists. It runs primarily through financial institutions in New York, backed by the Federal Reserve, supported by deep U.S. Treasury markets that provide global liquidity. China is the country most often seen as the future challenger to dollar dominance. Its economy is enormous. Its manufacturing base dominates global trade, and Beijing has spent years encouraging international use of the yuan. But the yuan faces a structural obstacle. China maintains strict capital controls. Foreign investors cannot freely move large amounts of money in and out of Chinese financial markets. So if the timeline is exaggerated, why does the narrative spread so quickly? Because incentives exist. Gold dealers benefit when investors fear dollar collapse. Some cryptocurrency projects benefit when people believe traditional financial systems are failing. Certain geopolitical actors benefit from amplifying the perception that Western financial dominance is ending. The dollar will not dominate global finance forever. No reserve currency lasts indefinitely. But there's a huge difference between long-term evolution and immediate collapse. The Iran conflict didn't accelerate the replacement of the dollar system. If anything, it complicated the process. Because geopolitical instability usually pushes investors toward the deepest and most liquid financial markets. And for now, those markets are still in the United States. So before believing the next viral headline announcing the death of the petrodollar, ask a simple question. If the dollar system is being replaced, where's the clearing mechanism? Because until someone can answer that clearly, the new system hasn't arrived yet. And slogans don't settle global trade.